Banks will seize your money. Yes, you heard me right. Banks are going to seize your money in the upcoming financial crisis. You must be thinking, this is ridiculous. What are we talking about? Are banks really going to seize your money? Is it possible? Unfortunately, the answer is absolutely yes. Sorry to break this to you, but your money is not safe in your banks. We have been oblivious towards the very basics of banking system, which has taken us to this plight today, says David Morgan, who we all know as a recognized industry analyst. In a recent interview, he has warned about an upcoming market crash and how it makes our money unsafe in banks. Morgan has answered a lot of questions in this interview that must be in your mind right now. He has also talked about some possible resolutions which can save our money. I'm going to decode all of it for you in this video. But before moving ahead, please press the subscribe button and turn on the bell notifications so that you don't miss out any of the financial updates in the market. So first and foremost, the banking sector is going to get into a major crisis. The sector has gone through ups and downs over the last many decades. However, this time, something else is making it a bit scarier. That is the involvement of bail-ins, which David Morgan is worried about. Unlike a bailout, where a financial situation is help from outside, bail-in takes an insider help. That is where our money comes into the picture. Essentially, the money we put in the bank is not our money, that's bank's money. When an individual puts his savings into a bank account, he is essentially becoming a creditor to the bank, that too an unsecured creditor. That means your money is used by the banks as credit money for running its financial activities. Did you notice the word unsecured? That has a lot of meaning here. An unsecured creditor's money is definitely going to be used during a bail-in. Your money is going to help the banks recover when it fails. That is a shocking news as well as a strong warning for all those of us who has money in banks. David has challenged a lot of our thoughts in this talk. Is our money really ours when we put it in a bank? Let's think about it again. Legally, when a bank crashes, as part of the bail-in procedure, the depositors' and bondholders' money is used to restructure the bank's capital. The banks even have the right to convert their debt into equity to increase the capital. All the accounts will be frozen and a person will not have access to his own money deposited in the bank. However, the FDIC has insured deposits up to $25,000 of unsecured creditors. Any amount above this will be used by the bank for bail-ins. And if we are to believe the financial experts, many of them including Warren Buffett and Michael Burry, has predicted an upcoming market crash. The toppling of US finance system is around the corner and there is no escaping it. Banks will crash and bail-ins will happen. To understand what David Morgan is trying to convey about bail-ins, we have to go back in history a bit and see why bail-ins, why not bailouts? The Great Depression, which ran for a year in the 1930s and 40s, caused more than 700 banks to fail. At those times, the banking system was not regularized as today, and people lost all of their money. In 1933, FDIC was formed to make sure that banks work securely for a customer. It is as per the FDIC, the $25,000 limit is kept as an assured amount for any customer to be withdrawn, even in case of a bankruptcy. Then came the 2008 crash. That was one of the biggest banking crashes of US history, which affected the whole world economy to be precise. To help the situation, the US government came forward with bailouts as a resolution proceeding. This was the first time the government was helping banks with directly financial help to keep them afloat. Numerous banks were rescued through bailouts, which helped the economy to bounce back slowly. The problem here is that government is using the taxpayers' money for bailouts. Actually, it is public money which is being used to cover the loss of banks who got into trouble because of their own malpractices. This raised a hue and cry amongst the citizens. Bailouts might help the economy, but definitely it will not make the banks work responsibly. As the public displeasure increased against bailouts, the Congress came up with the Dodd-Frank Wall Street Reform and Consumer Act in 2010. Through this act, the option of bailouts is eliminated for banks, and here comes bail-ins. So the resolution proceeding in case of a bank failure could have been a bailout or a bail-in earlier. However, currently a bail-in is the only option available, and that makes us to where we started. That is, banks will take away your money if they have to. The simple fact is, if you can touch your cash, it's yours. Until the time the cash is in a bank account, you don't own the money. Banks own the money. Does a bail-in means that you will lose your whole money forever? No, the banking system is not unsecured to an extent that you will lose all your money. However, the access to your money can be deceived. Maybe the bank will take 1 year to recoup and will be able to pay you only then. This can affect a person who has high expenses and needs ready cash. Think about what can happen to your business which runs with the money you roll through the bank. Think about the economic collapse this can cause when a hell lot of people does not have access to their own money to run their lives. In the scenario where you have put your money in a bank, the bank does not keep it as physical money inside them. Well, not all of it. Some cash is kept for immediate requirements, which we can check through a cover ratio. Cover ratio of a bank shows the financial health of the bank. The higher the cover ratio, the bank has more cash with it to cover its debt and immediate financial obligations. So after this amount, everything else is spread out in the economy. There is no physical cash in the bank for everyone who has an account in the bank. We are talking common sense now. However, we tend to forget these basic facts, which is normal in today's complicated financial system. So now let's take a look at what's the solution David Morgan is putting forward. Being an analyst in the precious metals market, he suggests us to invest in the traditional method of holding metals as assets. This can be gold or silver. Instead of keeping the money in an account, at least some amount can be used to buy metals, which is a great way of investment as well as to secure your money as yours. This is a better way of holding money in a fiat system of currencies. The value of the paper currency is the value the government has put into it. You own the money only if you have the paper currency physically in your hand. Metals has an intrinsic value. Another modern way of holding money securely outside the banking system is through cryptocurrency, especially bitcoins. With more and more people realizing the flaws in the prevailing financial system, they are more awake to the fact that they have to hold money in better ways than just as currency in banks. So it's not just for a bank crash. Moving into metals and crypto would be a wiser way to preserve wealth in the coming future. As per David Morgan, it would be difficult to stop the inevitable bank crash. One way the financial system is going to cope up with this can be by building another financial system. It can be SDR or a central bank digital currency. As of now, SDR or special drawing rights is an artificial currency created by IMF only to facilitate international transactions between countries without using actual currency. It is built by combining the value of important national currencies. So basically the transactions between countries are kept out of the financial system through the SDR. That can come out as an option for individuals as well. A central bank digital currency is also an option. Again, the issue is that for a transaction to happen, both the parties should have the same currency. So it might take some time to get these currencies popular and usable in public. To be short and precise, David wants that it is high time that we as individuals take effective measures to preserve our hard-earned wealth in better ways. Now it's your turn to tell me your thoughts about all this scenario in the comment section below this video. I'll catch you in my next video. Bye bye and take care.